Today, Bitcoin 2025 wraps up in Las Vegas. Hines, the chair of the White House Council on Digital Assets, breaks down the administration's crypto strategy. And Robinhood CEO Vlad Tenev lays out how blockchain could play a key role in the trading app's future. Welcome to CNBC's Crypto World. I'm Talia Kaplan. We're here in Las Vegas for the final day of Bitcoin 2025. And while we've got lots to talk about, let's first get a check on markets. Cryptocurrencies are mixed this morning, with Bitcoin trading just a touch lower by noon Eastern. It still managed to hang on to the $107,000 level, though. Meanwhile, Ether's in the green, trading at $2,644, and Solana was little changed at $169. Okay, let's dive into our coverage of Bitcoin 2025. Obviously, the world's largest cryptocurrency is a major focus at this event, but we've also seen a huge focus on the larger blockchain ecosystem and how corporations and the federal government alike are trying to change the future of finance. Crypto World's Mackenzie Sagalos explains.
The battle for the future of money is playing out on the Las Vegas Strip this week. The biggest names from the Trump White House, including Vice President J.D. Vance, Don and Eric Trump, and crypto czar David Sachs are here at Bitcoin's flagship event as the administration leans into crypto as a core economic strategy. Bitcoin is surging back toward its all-time high, fueled by ETF inflows, debt fears after Moody's downgrade, and a push to bring the dollar online. ETF funds now hold $134 billion. Stablecoins, backed by treasuries, cleared $28 trillion last year, outpacing Visa and MasterCard. And the shift comes amid a regulatory reset, with the SEC, OCC, FDIC, and Fed rolling back barriers that once blocked banks from using blockchain, paving the way for tokenized treasuries and other real-world assets. White House Digital Assets Council Chair Hines told me stablecoins could unlock trillions in demand for U.S. debt. But the push comes as ethics questions grow over Trump's own crypto holdings, including 4 tokens that funnel up to 80% of profits to his businesses. And while Bitcoin dominates headlines, the infrastructure push is elsewhere. Robinhood CEO Vlad Tenev says stablecoins could power 24/7 equities trading. And Tether CEO Paolo Arduino says they're building blockchain infrastructure to replace Swift, Stripe, even commercial banks.
JP Morgan will never go in a street in Africa in a small village and teach about how to use their stablecoin. That's what we do every single day. That's the difference. We work with the word of mouth. We work proving that our technology works in the smallest and most remote villages in Africa. If it works there, it can work anywhere else.
So this week isn't just about Bitcoin. It's about who builds the next financial rails.
Now, Mackenzie just mentioned some of the names she's spoken with here. Let's get to that conversation with Hines, the chair of President Trump's Council on Digital Assets. She asked him about the administration's latest crypto priorities after a number of executive actions by the president focused on digital assets.
The White House is really showing up in force this year in Bitcoin 2025. You're here, your boss, David Sachs, is here. We've got J.D. Vance delivering an address tomorrow, a lot of other top lawmakers. Why was it important for you to show up in force this year?
Well, look, if we want to be the crypto capital of the world, we need to send a delegation to be here on the ground. I mean, this is the premier event of the year as it relates to Bitcoin. There's a lot of exciting innovators that are here. And look, we're working to welcome in the golden age for digital assets, as the president likes to say. I think that just being on the ground at this conference, meeting with folks that are building in the United States is extremely important. We want to welcome folks that have gone offshore back home. Our message to these people is welcome home to the United States, the best capital markets in the world. We want to make sure that innovation is happening on our shores.
Now, a lot of people are very excited about the work that's already come out of the Digital Assets Council, a lot of the executive orders from the White House. The question now is what's next? And I think that one of the things that people have been wondering about is, have you found a budget-neutral way to acquire Bitcoin into the future as part of this strategic Bitcoin reserve?
Well, we've kind of looked at this in 3 phases. We've had the demolition phase, removing a lot of the red tape and over-regulation that existed. There was a lot of policy making through prosecution, which is not a good thing, for any innovation, in any environment, in any industry. So I feel like we're about 80 to 90% of the way home there with interagency actors, and we have, a dream team built out in this administration for digital assets with Hester and Paul over at the SEC, with Brian incoming at the CFTC, with Secretary Lutnick over at Commerce and Secretary Bessent. We feel as if we have the right folks, to make the changes that we need to welcome that innovation back here to the U.S. And we're going to move on to the construction phase here shortly. That's ongoing with Capitol Hill. We've seen the Genius Act make make great bipartisan progress over the course of the last couple weeks. We're extremely excited about that and optimistic that we're going to get that on the president's desk here in very short order. And then we move on to market structure. We wrap up that construction phase, move on to implementation. And this is where we talk about plugging in these new technologies, integrating them into the traditional financial system, so we can really update what's been an archaic financial system for quite some time. We're streamlining payment rails. We're ensuring U.S. dollar global dominance for decades to come. You're talking about trillions of dollars being poured into U.S. treasuries and people purchasing U.S. debt. This is all very exciting for the American people. They're going to have payment rails that are much more cost effective, much more expeditious, and much more transparent. I think that should be exciting for everyone, and we're certainly happy that this is being done in the bipartisan way.
I mean, what's fascinating is that you've got an issuer like Tether, a foreign issuer of a U.S. dollar-pegged stablecoin. They account for more than 60% of the market, and they're what, the 19th largest holder of U.S. debt?
Well, and they were the 4th largest purchaser of U.S. treasuries in the last year, which is quite remarkable. But look, we're creating fair market competition here in the United States. I think there's going to be a lot of competitors in this space. We've already seen a lot of the traditional financial institutions come out and say that they're going to create their own stable coins. So I think it's a very exciting time for the space. And again, we're revolutionizing the financial system. If you look at how things have evolved in other areas, even the ways in which we communicate with technology, a lot's changed in the last 2 decades. The ways in which we move money really hasn't. And I think that's something that we're very focused on changing and really just revolutionizing this space as a whole. I think it'll be great for the U.S. capital markets, great for our economy, and certainly great for this industry.
David Sachs talked to us last week, and he was very bullish on strong bipartisan support for the Genius Act. We saw that hit a roadblock when Senate Democrats came together behind an amendment that would require sitting presidents and other top officials. It would bar them from being able to benefit and profit directly or indirectly from a stablecoin related venture. It seems to be a straight shot at USD1, which is a stablecoin issued by World Liberty Financial, which has direct financial ties to the Trump family. What do you say to critics that are concerned about a potential conflict of interest where the White House or the Trump family more broadly is profiting from some of this advantageous legislation?
Well, I'll say very bluntly that the President of the United States can't be bought. He's working on behalf of the American people every single day, working to deliver on his promises that he's made to this industry. And look, this is a revolutionized financial industry, that's a revolutionized financial system that's occurring with a lot of the technology coming from this space. And if you're a good business person, you're going to be engaged there. But the president has his assets and his interests in a trust. It's managed by his sons who are not government employees. I think they're well within their right to engage in U.S. capital markets like every other American citizen.
Are you confident that you can get Senate Democrats back on board and see this Genius Act passed into law?
Well, we just did. I think we had, some odd 15 Democrats, vote for the motion to proceed. I think that was a great effort there, and we'll work through the last phase of this process on the legislative side. Senator Haggerty has done an absolutely phenomenal job, as well as Senator Gillibrand and her staff. And this truly has been a bipartisan effort. We've all worked extremely hard to get this bill to the right place. And at the end of the day, we're working together to make sure we have a piece of legislation that benefits the American people. That's our sole focus. I know our Democratic colleagues want the same thing, and we're going to make sure we get this bill through and on the president's desk.
Obviously, we're at a Bitcoin conference, but so much of the conversation has migrated to tokenization. And so stablecoins, we're talking about a tokenized dollar, but also this idea of 24/7 markets is something that Robinhood CEO Vlad Tenev has really championed, this idea of tokenizing public equities and also tokenizing private markets. Are those conversations that you're engaged in?
Well, we look at stables as being the foundation to everything else we can do, and that's why I continually use the term revolutionize, because as we update the payment rails and fix the plumbing in the current financial system, it gives way to the possibility of tokenized public securities and 24/7 markets and all of these things that many folks in this space dream of. I think that a lot of the traditional financial players dream of the same thing. I think it benefits everybody. If folks want to go in and out of our marketplace, they're going to have to use U.S. dollar-backed stables. That's great for the United States of America. It's great for innovators that are here, and we welcome that innovation, and we hope to see it through.
I know that you said that a Bitcoin acquisition strategy would be a part of a market infrastructure build conversation, be part of this constructive stage that comes next.
Yep.
But is that an ambition for 2025? I mean, we just today heard that Truth Social and the Trump media organization more broadly is a $2.5 billion Bitcoin buying plan, and it's part of a larger trend. We're seeing a lot of corporate treasuries move into holding Bitcoin as an asset.
Well, I think you're going to see a lot of the Goliaths in the tech space move towards the same thing. I mean, look, this is a massive opportunity to harness this asset class. We look at it as our ability to do that on behalf of the American people, but these companies are going to do the same for their shareholders. And we certainly welcome that. We think it's a great thing. Look, Bitcoin is finite. It's a commodity, not a security. As David Sachs likes to say, our AI and crypto czar, a brilliant person, by the way. It has the immaculate conception, meaning that there's not one centralized control piece or one issuer. this is something that we absolutely need to capitalize on for the American folks, and that includes an accumulation strategy. If you look at the fine print of the EO and the Strategic Bitcoin Reserve, it kicks that process over to Commerce and Treasury to come up with new and innovative ways. And as the president likes to say, we have a lot of high IQ people in the cabinet, especially in the Digital Assets Working Group, which was established in the first executive order on digital assets in this term. We'll flesh these ideas out. We'll move on those that we can implement most expeditiously, and we'll go from there.
And Mackenzie also spoke with Robinhood CEO Vlad Tenev, and the two discussed how blockchain could play a role not just in the retail trading app's crypto business, but in trading all kinds of assets in the future.
So let's start with tokenization. It's something that you're deeply passionate about, and we talk about it in the context of tokenizing public equities, but you also talk about this idea of tokenizing the private markets, really democratizing access both to what venture capital funds are able to do, but also to like some of these private companies that are just closed off from so many investors. Talk to me though about what it takes to make that vision a reality with respect to US policy, what needs to change to get there?
Yeah, so we've done a lot of digging into this, and we've actually been engaging with the SEC Crypto Task Force as well as the administration. And it's our belief actually that we don't even need congressional action to make tokenization real. The SEC can just do it. And they can do something akin to what they did a few decades ago with Reg ATS. They can issue exemptive relief from certain securities laws in lieu of formal rulemaking. And this is kind of what we're engaging with them about. I think that, and I think they're excited. They're excited, and everyone seems to want this to happen. So it's my hope that by the end of the year, we'll have some more clarity on how to actually tokenize securities. Private companies is kind of a different thing. And as you mentioned, private company is very important because if you're a retail investor in the US, right now, you can't invest in SpaceX or OpenAI or countless other companies that have grown from basically nothing to hundreds of billions in valuation, all in private markets. While at the same time, you're free to invest in meme coins. And now I'm a fan and supporter of meme coins, but I think these two things cannot coexist, where SpaceX and OpenAI are too risky, but you can do whatever you want in the meme coin world. So for that, we need a complete rethink of the accreditation rules. We basically need to make them much more self-certification based, where I, as a retail investor, can say, I understand the risks, I want to be able to invest in startups, and I think if we can figure that out, it'll unlock a huge amount of innovation and wealth creation for the US and overseas as well.
You mentioned that the SEC was on board with potentially changing some of the rules around public equities. When you say they, are you talking about Paul Atkins, Commissioner Peirce, or how are those conversations looking?
Well, if you look at Commissioner Peirce's public statements, she's very keen on modernizing the infrastructure. And I think a lot of the details need to be worked out, but I'd say Crypto Task Force within the SEC and administration is open to the idea of tokenizing equities. And our hope is that a tokenized equity can be treated sort of like pari passu a traditional equity, and not like some kind of strange derivative. And that way they inherit all of the protections that the traditional securities equities take on.
And one key component of this, you talked about using stablecoins to help facilitate weekend settlement. Genius Act was making strides and then hit some roadblocks with Senate Democrats coming out with an amendment to potentially bar the president and other senior officials from being able to profit from stablecoin related ventures. Seems to be a very clear shot at the president and some of his ties to new crypto tokens that have come out, a stablecoin, also a meme coin. How worried are you about political infighting potentially derailing legislation here in the US?
I think it's a concern. I think that when it comes to stablecoin, it feels like that's on the right track. And then market structure is a big one. And what market structure will help achieve is clarity on what's a security and what's a commodity. Because you saw with Ethereum, for instance, there was quite a bit of, there was like a turf war between the SEC and CFTC about who regulates these things. And I think if that happens, business struggles because you don't know which regulator you're going to be dealing with or which rules you're going to follow. So market structure is incredibly important in just providing clarity on who regulates all these crypto assets and how, there's talk about something starting off as a security and then transitioning to a commodity. But when that happens, how exactly it works right now is open to interpretation. So I think we have to solidify these things. But when it comes to tokenization can be done without congressional action. That's our belief, and so we're less worried from tokenization standpoint.
I mean, in terms of like the larger play with tokenization, we've talked about it in the context of, tokenizing private equity markets and public equities, but I mean, thinking about other, like, tokenization of all real-world assets, whether it's mortgages or something else, does Robinhood become the arbiter for that? Like, do you see this ecosystem really expanding to everything you could possibly bring on chain?
Yeah, I mean, a lot of these things that you mentioned do fit into the securities regime, right? And so if you could tokenize securities, that provides a general framework to take any asset. It doesn't have to be public NMS equity. It can be a private stock. It can be a mortgage-backed security. And I think the advantages are huge. So outside the US, it's difficult to even access American products. And in the same way that stablecoin has led to an increase in US dollar adoption overseas, I mean, in some of these countries with rapidly devaluing currencies, stablecoin through crypto rail has become the preferred way of getting access to dollars. I think in the same way, tokenized securities will be the default way to gain exposure to US stocks and also other US assets. So it could further the dominance of US companies globally and, potentially help capital formation, because if I'm an entrepreneur starting a company and I could plug into a global network of capital to raise money for my venture, I would make use of that. I think many early stage entrepreneurs would. So you could have an explosion of new ventures being created, which I think would be amazing. So I think there's a huge societal benefit for the entrepreneur, a benefit for citizens of countries outside the US that might not have robust capital market systems, might not have local assets to invest in that are as attractive. So I think it's going to happen, and I'm very optimistic that we're kind of putting the pieces in place to do this.
Okay, before we go, we just learned yesterday evening that this Bitcoin conference will be back here in Vegas next year. And that's all for Crypto World today. And although Bitcoin 2025 is wrapping up, we've still got many conversations to bring you, including with Strategy's Michael Saylor and NBA star Tristan Thompson. We'll be back again tomorrow with more of those conversations here at Bitcoin 2025, and we'll see you then.